All right, Lee, I'm going to bring up that heat map. There's a bit more green on the screen here than when we spoke yesterday in the morning, but we actually had a really interesting market day yesterday, going up quite a bit. Had some good positivity, and then we actually sold off in the afternoon as seemed to be some profit taking as coronavirus headlines can kind of continue to rule the roost, so to speak. What's moving things this morning?
Yeah, so let's start overseas as usual in Asia. Uh, Data released overnight in Japan showed that their country's corporations are still looking for liquidity. Uh, their loans went up 1.44% month over month and are up 4.9% over the last 3 months, which is a record over there. In short, what does this mean? It means Japanese banks have responded to the crisis by unleashing a huge wave of credit to borrowers, just like we are doing here. This is constructive in terms of keeping activity afloat over there. Also, in Asia, mirroring the strength we've been seeing in copper that we talked about in charting the markets, which has been going to 52-week high. Singapore traded iron ore futures closed at an 11-month high last night, up 8% over the last week. In Europe, the CEO of Daimler, which is Mercedes' parent company, guided June global auto deliveries actually slightly above last year's levels, as auto sales are coming back from their recent plunge. Without giving any specific numbers, though, the CEO noted positive order trends in key truck markets. So a little bit of recovery there, which would be good for Germany. Um, let's not forget that Brexit is still out there. And yesterday, UK Prime Minister Boris Johnson told the German Chancellor that he is prepared to leave the EU without a trade deal if they cannot compromise over fishing rights and the influence of European courts on British legislation. So, if they did a hard Brexit, what would be kind of analogous situation? It would be like Australia. They will have no comprehensive trade deal with the EU. They'd have to follow default WTO rules, and there would be specific agreements for certain types of goods. Regarding the virus, both the daily and 7-day average for new cases per day have hit new highs as of yesterday. Um, Also, the net growth of hospitalized patients is the highest level since mid-April on both the daily and 7-day average. Deaths are now finally beginning to rise again. They figured that would happen with the increasing cases. You know, there's a lag, unfortunately, or for the deaths, but they are beginning to pick up again. Out of the United States, Kevin, only 12 states do not have rising case growth. And
Hmm.
deaths per day are at a record over the last week in what we call the surge states: Arizona, Texas, South Carolina, and Utah. Florida, as you know, is having a big, right? They're at 80% of peak deaths right now. Um, Also, just to put all this in perspective vis-a-vis the markets, uh, I'll just point this out. The reopening trade seems to have faded and is now dead. Just listen to this. The S&P is where it was a month ago, basically unchanged.
Mm-hmm.
Uh, However, the average reopening stock, like American Airlines, Norwegian Cruise, Carnival, Wynn, they've all gone down at least 27% during the same period.
Ugh.
And yeah, bank stocks, as we know when we look at the XLF, have taken a heavy hit also. Um, they're down 18% over the past month. So what is doing it is it's just the movement into tech, but the reopening trade seems to have faded with the new recurrence of the virus. Okay, domestically, there was a lot of Fed speak since our last session yesterday morning. Let's just review that a bit. Vice Chairman Corrida said in a television interview that the fate of the economy is tied to what happens with the virus. I guess he has a keen sense of the obvious there. Um, he added the central bank will do more if it determines the action will achieve its job and inflation goals. This I thought was interesting though. So he did, you know, admit that the Fed balance sheet is now at $7 trillion. But he went on to say there is no limit how much we can purchase in terms of treasuries, quote unquote. Then we had Federal Reserve Bank of Richmond President Thomas Barkin said he believes, though, the conditions are in place for a good rebound. He said that the economy now has in place, quote, unprecedented levels of monetary and fiscal support. And, quote, once people are comfortable re-engaging, there's a real potential that money can get spent. Yeah, but that's the issue, right?
Mm-hmm.
Are people company re-engaging? And we're seeing, at least in the stock market, that that particular idea is maybe not as clear as it could be. And then we had Cleveland Fed President Loretta Mester. She said that the health situation is starting to cause issues for the economy. Starting to. She said that when it comes to economic activity, quote, over the past week, there has been some leveling off, and I think it's probably due to increase in cases, not only in Ohio, but across the country. So I think the realization is sinking in that reopening is being retarded. In other domestic news, we had mortgage applications, the only major report. They were up 5.3% week over week. That's a new expansion high. But year over year, year to date, mortgage apps are up about 60 basis points. So we haven't gotten the full catch up, but at least it was encouraging. That's all I got for the overall news. We have plenty of stocks in the news now on a micro level.
Cool. Let's do that. Where to begin today?
Facebook.
Okay.
So they had the meeting that nobody was impressed with. Apparently, the groups that are doing the advertising boycott left unimpressed. And the feeling is they are still not doing enough to police their platform for inappropriate content. But at least they're holding their own for sure in the market. It's near high. So I
Pretty
think the
darn
next,
close. Yeah.
next trade here would be what, a breakout type trade.
I think so too. You could see the candle there yesterday was is not what you're looking for. Could take a little bit of time here, and I think you're right on the money with the news about how that meeting went. My understanding was the advertisers were anticipating a little bit more in the way of a structured plan already having been implemented, and that's just not what they've got in that meeting. It sounds like so.
Exactly.
Disappointing.
This I found a little interesting. Look at Disney.
Okay.
So as you know, California, we're a hot spot too, especially Southern California, and
Mm-hmm.
and they have pushed back the opening of Disneyland, which is the one out here in California, till at least the end of the month. But then they came out yesterday and said that they're going to open its Florida parks this weekend, in spite of what's going on. I mean, Florida's another hot spot, so
Mm-hmm.
kind of interesting.
I can't say I understand the rhyme or
No,
reason to
I
that extent,
can't
but
either. Can't either. Uh, Pretty much mired in a range too.
yeah, I would agree. Basically, it's sitting, support here. I think drawn in at 108 looks about right. Basically, everything that's happened since mid-May is the range that I would eyeball here. I think.
Yeah, so not really a lot going on there. Let's take a look at let's see, Caterpillar.
Okay.
Trying to get above the 200-day moving average. They were upgraded to neutral from underperform at Bank of America Merrill Lynch.
Take an upgrade when you can get it, right?
Yeah.
Yeah, it looks like it broke this, this nice little retracement back to support, and you've got it hanging in there. But you're right. The fact that it's just not doing anything against that flat 200 doesn't give you the impression that it's ready to just start cruising, does it?
Yeah, that's
I
for
would I
sure.
would look I think I would look for some consistency. This is a pretty good ledge, but I'd like to see it show some strength above this area.
Yeah, that's for sure. Let's put up National General and GHC. Not a bad move, 64%.
Oh, there it is. I was looking for the action. It's way up there. That's a breakout, Lee.
Yeah, that's a breakout.
Wow.
Yeah. Anyway, they are being acquired by Allstate. It's
All right.
34.50 per share in cash. So that's
So
the
still
breakout.
trading a little bit at a discount to that number, but
Yeah, but
good move.
obviously,
Good move.
yeah, and apparently Allstate wanted to have a larger footprint in property and casualty, and National General is strong in that area. So the whole deal is worth about 4 billion. Allstate, just like most acquiring companies, is down a little bit, I think. AOL.
Check it out.
Yeah.
Yeah, about
So
3%.
yeah, it's par for the course. Although on a
Hmm.
technical basis, that doesn't. It better stop about here.
Yeah, this is pretty much where it has to hang in there, doesn't it?
Yeah. So watch that one.
Kind of
Mm,
interesting.
yeah. But it looks like they bought it up right at that previous low a little bit. So hopefully it'll stay in the range.
Yeah, keep an eye on that.
Alcoa, AA.
Hey, hey, trying to get above
Trying to
that.
get above that downtrend line, right?
Yeah.
Um, so up a little bit. Um, they said their Q2 revenues and earnings will be above consensus, so they kind of like pre-announced. So a little bit of good
Hmm.
news there,
Yeah.
but it's faded off the open though, which is
It has faded off the open. If you like the fundamental story, though, if you're listening to what they're telling you, you do have a good risk reward setup even at this range, Lee. You know,
yeah,
if you work against these lows here around 1070 and you anticipate a rally to the prior high,
it's not bad.
um, not bad. It's still more like, yeah, it's better than a 1-to-3 risk reward ratio. So,
And the news is supporting it, so yeah.
exactly. You were right, though. It did have that. Take a quick peek at the 5 minute. Had a really nice open, and this has gone the exact opposite of what you would have expected on that news.
Yeah, so
Maybe
now it's
some
a wait and
caution.
see.
Yeah.
Wait and see. Nobody's heard of this company, but let's look at it. Apple.
Okay. Man, look
Mm.
at that. Just continuously.
This is what
But,
is moving all the indices. As we saw, a lot of stocks are not participating, but this one certainly is. Deutsche Bank hiked its price target to 400 from 380.
mhm.
So that was a 7.3% upside from yesterday's close. The commentary was overall, we feel comfortable that Apple should continue to offer upside for investors. Um,
And I also saw something about Warren Buffett commenting about Apple not just being a stock, but being it's not just a stock they own, but being their third business at
right.
Berkshire, which I find to be pretty interesting. He says, "quote It's probably the best business I know in the world."
Yeah.
Unquote. So obviously, you're not going to have negative moves when Mr. Buffett is extolling.
No. Yeah, Berkshire Hathaway owns 5.5% now. They're the second largest shareholder of Apple. Okay, this is good news for everybody. Biogen, BIIB. We told you
Okay.
about the biotechs.
Hmm.
Yeah, nice move. It should, this is a big one. That should help the IBB. We'll take a look at that in a second. But good news here. They submitted an application to the FDA for a drug I can't pronounce, but it's used in treatment for Alzheimer's disease. And if approved, this would be the first treatment with potential to meaningful change the course of Alzheimer's, according to Biogen. So that's good news for everybody.
It's really good news. Yeah.
Yeah. American Express.
Okay.
Yeah, like a lot of other financials, it just can't get out of its own way. As a matter of fact, they were downgraded to neutral from buy at Citicorp. They cited the potential for, quote, top line headwinds. They trimmed their price target out to 105. It was at 110.
Yeah, that looks about right too, given the price action it's reflected in the last 6 months here.
Yeah, speaking of stocks that have been on a roll, though,
Yeah.
Nikola and KLA.
Yeah, that one's gotten pounded in the last week until you get a little bit of a
Bounce on the 50. There was your,
hit that 50 on the nose yesterday.
yeah. So anyway, JP Morgan upgraded them. They make electric trucks, as you probably know, to overweight, noting what they said was the stock is starting to look attractive for long-term investors in view of the number of potential catalysts in coming weeks and months.
Yeah, nice 25% move on that upgrade. We'll take that. I'm sure the longs will. All right.
All right, Intersect, XENT. Boom!
That's interesting. 30.
Yes, Medtronic has made an offer to acquire these guys. They're a medical device company, though talks are still in the early stages. I didn't see anything about a potential target price, but moving on, M&A. So that's a little encouraging for the overall market that these big companies are finding still some value out there.
Sure. Yeah, absolutely. This is an interesting move too, just to get above that 200-day with some get clear of the 200-day. I'd keep a close eye on it for the next couple of days and see what you get after this type of move.
Yeah, and keep your eye on the news to see if they mention a deal price. All right, let's take a look at United Airlines. We talked about the reopening trade fizzling a little bit. Yep, I mean,
Trying to hold firm.
trying to hold firm, but you can see obviously well underperforming the market. They did come out and say that their July capacity will be down 75% year over year. So, but things are picking up. Still, a lot of people apparently are not flying. And finally, we had a downgrade on Altria, MO. Didn't do too much, but it was downgraded at Barclays. They said that Altria is 100% US exposed and continues to lose market share.
And that 100% exposure to US, that's interesting. So they've got, so their exposure does not extend globally at all?
Yeah, I thought they did, but that's what they're saying.
Okay.
All right, and let's see. Kohl's, KSS.
Okay.
Nice little bounce off the 50 today, right? Look at that tail right down to the 50. Up. They were upgraded at Bank of America Merrill Lynch to buy from neutral. So I think they think that they will be one of the few to survive in here. On an unrelated note, as far as publicly traded companies, let's all have a moment of silence for Brook Brothers. They have been around for 200 years. They survived 2 world wars. They survived the shift to casual dressing, but the pandemic, unfortunately, they are going to now close.
They're asking for buyers, right?
Yeah. It's privately owned by an Italian businessman, Claudio Del Vecchio. But also, the reason that it is also a little bit kind of bad news is they're one of the few companies that make all the clothes domestically, and they're warning that they're going to close 3 of their factories in the U.S.
That doesn't help.
No. All right, so that's all I have.
All right, on that sobering news, let's check out what's happening with the S&P here. And you mentioned it, Lee. If we just look at where we are today, we haven't really gone much of anywhere since we broke out and had this little island situation here. We've come outside of it still. We've managed to be okay by breaking out of this little downtrend here. Let me draw this in. And you'll notice the one positive I'll take, Lee, is after having broken this, we have held up, right? We've held this level above the 20-day, above about 3,120 or so, which continues to give us optimism on things. But the fact is that we've not driven ourselves to a new high yet. We are not, even though we're getting better move off of the RSI once we got down below the 50 line here. We'd like to see this kind of leading things a little bit upward. We're really just kind of in a bit more of a sideways range here, and the trend has been happening on individual equities, but maybe not on the broader market, on the S&P 500 here. So, it's an interesting area to be in, Lee, because the most recent positivity we had was a really good jobs number not all that long ago, and that kind of led to this little breakout we got out of this range. But it'll be really interesting to see when we get that next jobs report, which will encapsulate everything that's happened since about June 15, and things have been a little less optimistic since then.
Yeah. Um, on charting the markets, we said about a month ago, given all the backtesting studies, that we were going to go neutral, and that's what
Mm-hmm.
we've done. Yep.
Real quick peek here on the intraday just to see what the action looks like. Um, and we started off relatively flat. We got a good bar off the open here. And we've had a good move so far. So, but we're just between the pivot and R1. So we haven't exactly taken anything out given this move at this point today. So keep an eye on the pivot ledge here at 3157 or so on the S&P. I think that's going to be a important level for us to maintain for the short run here today.
Yeah. Now, if you want an entry on the long side and you're day trading, you could give it a shot if it pulls back to the 20-period EMA there, which is that
Right.
white line with the stop right underneath. It's also interesting. Technical analysis doesn't work. Look at the tail right to R1.
Yeah, right there.
Faded.
Yeah, and what's interesting is how that looks when you're in the middle of it, because that moment is a big green, beautiful candle, and you're just going, "Oh my goodness, we're gonna pop right through there." And it really reiterates the necessity to watch the full candles here. I think tricky on the intraday basis, isn't it, Lee?
Yep.
Not an easy game. So some things to look out for there in the S&P. Let's take a peek at let's look at the Qs other than the composite, because we know the strength has been within the NASDAQ 100. And you can see here the Qs, and the most important level here, Lee, is the 20-day, right? I mean, goodness, how this has been sound. Um, of course, retracements to the 20-day never feel good. And we often say, Lee, that when you call for them and you're waiting, oh, I'll join this trend when it retreats to the 20-day, and then you get to the 20-day, that day it doesn't feel very great. Kind of have to plug your nose and go for it sometimes, don't you?
Yeah. Again, we do notice the divergence there on the RSI, but again, it's still at overbought levels, so we're not
Mm-hmm.
quite as worried as if that was not the case.
And notice the unbalanced volume. The volume just keeps coming into the NASDAQ here, at least into the Qs.
Right.
So heavy influx there of funds. So, this continues to move. Don't fight what you're seeing, everybody. If you're looking for places to, maybe lighten up, I could understand if you've been holding the Qs and you wanted to take a little off, maybe if you get below the low of yesterday, you start to do that, or even the low from Monday. You start to reduce position size and wait and see how it acts around the 20-day again. That's a good way to maybe consider massaging your trade or managing your trade a little bit if you're looking for reasons. But a group making new highs like this, it's really tough to take money off the table at those new highs.
Right.
How
How about the Russell?
about the Russell? Yeah, this has been a bit more mired below its 200-day, pretty range bound here. For the most recent action, the 20-day has been kind of resistant now for about 3+ weeks here. We got above it for a day and a half, but I don't think the moving averages are all that as important as the range we've been trading in here since mid-May. Lee, what do you think?
Yeah, again, this is just doing nothing right now.
Hmm.
Yeah, I think though you've got it drawn in there. The green line should be support. Uh, First to 200 will be resistance. If you can get through
Hmm.
there, then we'll probably pop up to 1540-ish.
1540. Yep.
But it hasn't done it. Although, to your point, I like the way you have drawn the RSI support line. So that's what we want to watch. If we get a
Yeah,
pullback there, uh, that's actually the OBV
it
line, but
is.
it's but it but it's exactly where you would draw it. It's
How
exactly where you
funny.
would draw it.
Yeah, the
Yeah. So,
midpoint.
so a break of that, if you take an RA, uh,
The RSI indicators,
yeah,
the indicator lab
that would be
course.
a break.
Yeah, so
But it
keep an eye
hasn't.
on that ledge
Yeah.
that's in there because that RSI can provide support as well, or at least it can give you an illustration of support that you'd like to see maintained. So RSI moves below those levels that are highlighted here by randomly as it may be, but are highlighted by this pink unbalanced volume line. That could very well spell a little additional weakness.
Yeah.
Yeah. All right, let's see what's going on in the transports. You're getting a little bleed there on things here today. We were up a bit, and you're pulling back. Also been a bit range bound here in the last period since mid-May as well. So, wanting to get this out of this area, I think this is much more neutral. I think again, Lee, it's clear the hang up remains in the airlines and the planes, and their inability to kick up any real excuse me, any real business here at this point. You said it, year over year broadly down 75% is a rough look at that. So let's see what else. About the stocks, and then let's do some sector action. Let's see what's going on here. See, this is hanging in there too, isn't it?
Yeah.
I find the fact that it's above here still okay, because that still looks like a breakout to me, Lee. And I think as long
Yeah.
as you,
It
yeah,
does.
as you hold this ledge here at around 2000, the Sox still has opportunities to move. But this is a group that a very important overall group to the market, right? I mean, the business in semiconductors is substantial, or what we do these days, what we do and all we do, pretty much, right?
That's right. So that looks okay. Yeah, I think the bottom line on all this is stay with what is working, which is mega cap tech,
Right.
uh, and some of the components, software, semis,
Yeah, I think
biotech.
that's it.
Yeah, also biotech.
And software.
Everything else and software, everything else
Hmm.
is kind of range bound. So if you're trading, you want momentum, you should look in those areas.
I think that's the way to say it, Lee. The reminder that there's a very big difference between how you approach the trading portion of your portfolio and the investing portion of your portfolio. And when trading, like you just called out, traders are looking for momentum and looking to capitalize. And you don't want to play in the neutral trends if you're looking for momentum, obviously. All right, Lee, being led here today by the XLK, the tech group, up 1%. See how this looks. Pretty sound.
Yeah.
Holding the breakout here. What are you going to say? I mean, you put the 20-day on this. I think you can see that it's been pretty consistent here as well. So,
Although you'd have to say the momentum is fading a little bit looking at the RSI there.
yeah, it's not giving us another short-term higher high. That would be favorable if we could
And
hit
it's
it.
not overbought either. So
Hmm. Does it kind of feel like we're getting a little tired here, perhaps?
yes,
Yeah.
that's what I'm thinking. Um,
Okay.
so now that divergence doesn't mean you have to go down. It just could mean you could work off what was overbought by going sideways.
Hmm.
or it could pretend pull back to the 20.
Yeah,
But
and
I
that
am
can be a
noticing
combination
that,
of things too.
yeah, I mean, that is a little bit more worrying than on the Qs.
Yeah, we have some good questions in the queue today, Lee. General rule when you're in a stock that's if you're looking at a stock in an overbought condition, general rule, is it a good idea to wait for a pullback to enter? And I think this is one of those the toughest questions, because the term overbought implies, of course, that there's going to be an opportunity to get it lower. But one thing we do know about technical analysis and looking at conditions like overbought or oversold is that they can stay in those conditions far longer than you would expect. I think the general rule, Lee, is if it's a stock you want to be in and you're seeing that it's in overbought conditions and you feel like it's got opportunity still, you can take on a small position, but try to keep it small so that you can participate. And that way, if things don't hold, if the overbought condition does reverse and give you a chance to test support, then you need to be ready to act and take advantage if it does come back to a support range. We commonly mention something like that, but generally speaking, Lee, do you agree with that?
Yeah, and it also depends on why it's overbought. In other words, on a breakout through resistance, often you're going to see an overbought RSI, but
Sure.
that is different than if it has been going just straight up also. So it depends on why the stock is overbought. You have a lot less hesitation putting on a full position if the stock is overbought, but it's breaking out through resistance. If the stock is, just been chugging its way higher and it's overbought, then I'd say the rule of thumb is you buy a little, because I've
Hmm.
seen stocks go up 13 to 15 days in a row, but be not everything, because you want to look for that pullback, which probably will happen. You just don't know when, and you want to have a little bit of cash around to take advantage of that. So again, it depends on why the stock is overbought.
Yeah, that's a good point. You reminded me, Lee. It also kind of depends. Is it overbought in the midst of a downtrend? If
Right.
it's a downtrending stock that is suddenly overbought, that presents itself as an excellent opportunity for a short setup if the longer term trend is down. So I could say generically, I think we've answered this in a couple of different ways, but it really does depend on the overall nature of the stock and where you are, and maybe the longer trend as well. So always good for a conversation, though. On a trade to trade basis. Remember, we've got representatives there to speak with you. So good chat to have with a broker.
Yeah, we got a question on smart money, dumb money.
Hmm.
It is 42.70. So getting a little bit wider than it had been. 25 to 30 spread is a little worrying. We also had the bull bear spread on Investors Intelligence yesterday got up to almost 40, 39.4. So yeah, you're getting a little warning signs, and again, I'm seeing a little bit of less momentum on a couple of these. So I think we're probably not going to take out that high on the overall market that we had about a month ago.
Hmm.
Um,
I think that's
and,
fair.
and and maybe these other really strong areas might go a little bit more sideways.
And Patty has a good question as well, Lee. This is given the market we've seen in the last few months, this might be a lot of investors, but if you're a longer term investor with a position up 40 to 50%, how do you go about taking profits? Which is a really difficult thing to talk about, because as an investor, you're not really looking to be a seller. When you're up 40 or 50%, right? I mean, just because you're up 40 or 50%, the reminder you need, I think, is that that position represents an exposure that you have with your money to a given group or area of the market, right? And isn't it as important that you maintain that exposure as it is that you look for ways to take profits? I think more investors are apt to stick with a position regardless of the profit situation. What are your thoughts to that extent, Lee?
Well, here's my thought on that. If you are a longer term investor, then you're probably going to lean more towards fundamental than technical analysis, number one, right? Because you're going to be holding, hopefully, for many earnings seasons, right? Uh, so why did you buy it fundamentally? Okay.
Hmm.
The reason you sell things fundamentally is the reasons that you bought it fundamentally are no longer true. If you bought it because it's been raising its dividend every year for the last 10 years and now it isn't, well, maybe the reason you bought it uh, is no longer true, then you might consider selling.
Hmm.
So it's really, why did you buy it, and based on fundamentals, and have those fundamentals change. Mark Item has a good rule of thumb too.
Hmm.
Uh, watch it versus the 200-day moving average. If it starts going below that, that is, put an alert. You don't want to sell it necessarily, but if it is for the first time trading under that, you definitely want to take a look at the fundamentals and see maybe why.
Yeah,
But
good
barring
call.
those, but barring those things, you're getting your risk reward. Your risk management in a diversified portfolio by just having exposure, in 25, 30 names,
Hmm.
something like that. So
Yeah,
I guess that's how
I
I would answer it.
yeah, I see the follow up is that the client was buying high flying tech and they're up 40-50% on some of these positions, probably in a short term period. Given those types of moves, those are ones you may want to try to capitalize a little bit on by just taking some profit off the table, taking a portion, and just sitting
Well,
and breathing and seeing what's going on, perhaps. But
yeah, and the way to look at that then is that's what you bought. If it's a long-term investing account, your
hmm,
allocation to tech is probably a
well
little bit out
overrated.
of whack.
Yeah.
Then you go back to your mean allocation for that sector, and do take some profits if
Hmm.
that sector is too big a piece of your portfolios. So it's kind of like it's the rebalancing situation also with that.
Yeah. Good point, Lee. Good point. All right, Lee, looking at this group here, looking at the overall moves we're seeing in the individual sectors, I was wondering about something kind of set up here. I mean, are we looking as I don't think we can as of yet get too negative on something like the industrials, because the group was hanging into the 50-day moving average here, so this is going to incorporate a couple of different areas which have clearly struggled for a bit, but we're holding 50-day moving averages. So I don't know that I've got anything from a bearish standpoint on a sector basis. We had some questions about possibly looking that direction, but I mean, what are your thoughts here? I'm a little timid about looking in individual groups for more upside, unless we're talking about real short term, of course.
Yeah, I don't know. It's again, if you wanted to trade momentum for something
Hmm.
quick, we can run our uptrend breakout with increasing volume screen. We found some really good ones. Let's do that again. It will just because we're talking about things. Let's see if we can get some breaking out through
Sure.
resistance.
All right. So let's see what we have here. And everybody, this is one of those screens that we have preset for you here. So it's uptrend breakout with increasing volume. A single click here would give you the ability to launch it over here. I'll take a quick second.
Yeah, just go to the results. We'll take a look
Okay,
at
there
those.
we go. 29 of them. See what we have. Some common names in the list, Lee.
Yeah, you could narrow it down if you put in A's and B's, but
Oh, you're right. We probably could, couldn't we?
yeah,
All right, give this a quick second. It's going to load. And we can do, what we can do is I can change this. Let me change this to the equity rating here. Then we'll just
yeah,
sort it by A's and B's. How about
yeah,
that?
that's a good idea.
All right. So equity rating, sort. Ah, how about that? We've got one B in the entire list, Lee, and the rest are non-rated.
Yeah. Well, we can
So
look at the
let's,
non-rated ones.
yeah, let's
So
talk about, you want to talk about
Amazon.
Amazon since it's there?
Yeah.
All right, let's do that. Come on now. There we go. Well, Lee, it just continues its charge, doesn't it?
Yeah, you want momentum? There you go. It's beginning to flag a little bit.
Mm-hmm.
It's at a $1.5 trillion market value right now.
Wow, look at that. Well over 3,000. 20-day on this has been really good for a while here. Look at the breakout. I like this action, Lee. We get the breakout, the throwback to the 20-day that gets cleanly bought up immediately. That time, here's another wonderful tail below the 20. So the 20 is about as sound as you're going to find, I think, in the short run. Moves below the 20, things change quite a bit. But look at that
Yeah,
on balance volume all the way up. RSI well over the overbought condition. You had with the most recent breakout, you had a new all-time high or a new high in the RSI as well, excuse me.
yeah.
So
So
this is
here's one of
RSI
the
behavior that's positive.
yeah, and this is what we're talking about. It's overbought. It continues to run. Buy a little bit if you don't have a position in it, and then add if it pulls back to a reasonable support level.
Exactly.
Which would it might not even get down to the 20. It might get down to uh, where that we had that little red candle after the two big up days. That could be
Mm-hmm.
shorter term support right in there. Right there.
Bingo.
Yeah. Yeah.
Good
So
call there.
that might be a place where you would add. But again, buy a little. You never know. I mean,
Yeah, and you called it, Lee. That is pretty coincident with the 10-day right there too.
yeah.
So, yeah, good looking chart. You really can't argue with it. But I think it illustrates exactly what you just said, Lee. Sometimes when you look at these that are breaking out, if you want to participate, you just have to, as our buddy Lou Mercer likes to say, you
Mhm.
got to plug your nose and go with it. Put a stop in, make sure you're comfortable with it. But sometimes you just got to you have to do just that.
All right. A lot of requests for Baba.
All right, let's talk about it real quick. Yeah, breaking
Yeah.
out, but that's been choppy before this, Lee.
Yeah.
And I'll put a support line in here at the prior highs. I think that's
So again, you buy a little and maybe it'll come back and test that. Maybe it won't.
mm-hmm. Yeah, it's not uncommon to get thrown back to the breakout point. But if you're left sitting on your hands waiting for the throwback to the breakout point, you could be waiting quite a while. It may never happen. You just don't know.
Yeah. And with that, Kevin, our time is up.
Always a quick session, Lee. Let's see. I'll be returning a little later today, back at noon Eastern. I'm up with our regional investment strategist, John Bullock. We'll be doing Fuel Your Trading with Street Smart Edge, so a little deeper dive into the platform for all of you. Beyond that, Lee returns for our standard daily charting the market session, joined today by Lou Mercer. So looking forward to that, of course. And then I know everybody was curious, just wondering about the screen itself. I'll just remind you all, this screen is one of the presets available in Screener Plus. So it's over here under the Screener section at the bottom, and you're looking for uptrend breakout with increasing volume. Remember, these are just preset for you. Once they're opened, you can play with the criteria here and alter the criteria to your discretion. So play with that and add in some additional details if you'd like. So as always, great to have you, Lee. Thank you so much, everybody. Appreciate you joining and appreciate your comments and questions. Hope you all have a fantastic rest of your trading day.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, you get commission-free trades and quality trade executions from the only firm that offers a satisfaction guarantee. Schwab, the better place for traders.
Hello and welcome to the Quick Start video for the Watchlist tool available on Schwab's Street Smart Edge platform. The Watchlist tool allows you to monitor a wide range of streaming market data like last trade and volume about securities of interest to you. Let's load the tool by going up to Launch Tools and then click on Watchlist. Once opened, to create a new Watchlist tab, right-click on the tab at the top of any watch list and select New Watch List, or click the plus sign next to those tabs. Simply add symbols up in the symbol box that you want to add to your new list, and be sure to name it by double-clicking the title of the tab, or right-clicking and hitting Rename X2 so that it is identifiable going forward. Do you have separate sectors or strategies in mind but want to keep them in the same tab? Create groups within a given watch list and add or remove items by right-clicking on the security or group. You can even move them between groups easily by grabbing the security you wish and dragging it. You can also separate out strategies by opening separate tabs, as well as by clicking the plus sign next to the last tab in the tool. All the information is customizable as well. Columns can be moved around and changed in the tab, or add, remove, and move items in the settings menu as well. Trades can be started by engaging with the watch list. Click on the bid to load the all-in-one trade tool with a sell limit order loaded at that price. Or click on the ask to load a buy limit order with the ask as the limit and change the order to meet your needs. Also, you can right-click on any security to load the all-in-one trade tool, research, or view news on the stock. Have you already created watch lists through Schwab.com or want the lists you create on StreetSmart Edge available on the website as well? Just click on the Sync button. It will turn green, meaning that the watch list you create on Edge will be visible on Schwab.com and vice versa. This concludes the Quick Start Guide for the Watchlist tool on Schwab's StreetSmart Edge platform. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.
Okay. Bounced the trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy.
Speaking of blind spots.
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. Plus, get commission-free online stock, ETF, and options trades. Schwab, the better place for traders.
When it comes to identifying trends and trying to pick tops and bottoms, the MACD indicator can be a useful tool. MACD stands for Moving Average Convergence Divergence, and it is based on the behavior of moving averages. Notice that when a stock or index begins to rise, how the faster moving average is above the slower one. What this means is the more recent prices are getting stronger than prices in the past, it could mean an uptrend is beginning. The reverse of this, of course, is also true. When a faster moving average drops below a slower one, what that means is that more recent prices are getting weaker than prices in the past. It could mean that a downtrend is beginning. The MACD indicator is based on that behavior. It has two lines in its composition. The first we call the MACD line itself, and it is the red line in this indicator. It is simply the difference between those two moving averages on the chart. So when the faster moving average is below the slower one, you can see that MACD is negative. However, when the faster moving average is above the slower one, you can see that MACD is positive. The second line in the indicator is what we call the signal line. The signal line is simply a moving average of the MACD line, and it is the blue line in the indicator panel here. When the MACD goes above its average price, which is the signal line, it could mean that prices are getting stronger and you might be beginning an uptrend. Let's see how we can put the MACD to work. One way to generate trading signals is simply to monitor the MACD line itself. Notice when the MACD line goes from below zero to above zero, that can mean that the moving averages, the faster one is going above the slower one, an uptrend may be beginning. Many traders would use that as a buy signal and stay in that position until the MACD line goes from above zero to below zero, and then they might consider selling or even going short. Another way that traders use the MACD is to watch the MACD versus its signal line. When the MACD line crosses its signal line, many traders would use that as an early entry on a buy signal and then stay in that position until the MACD crosses back down below its signal line. Another way we can use the MACD is to try to pick tops and bottoms. Notice generally that when a stock is going higher, the MACD line tends to follow along with the stock. Sometimes though you can see that's not true. Between here and here, notice how the stock went up, but the MACD lines went the opposite way. We call that a negative divergence. What it means is the momentum on the last move higher was made with a little bit less oomph, so we could look for a potential pullback or a reversal. The opposite would be true if the stock continues to go down, but the MACD line doesn't. We would call that a positive divergence, and that could be a potential bottom. The MACD is one of the most popular and widely used indicators in technical analysis. But keep in mind, of course, that no indicator works all the time. You might want to confirm with other technical tools. When it comes to identifying trends and trying to pick tops and bottoms, the MACD indicator can be a useful tool. MACD stands for Moving Average Convergence Divergence, and it is based on the behavior of moving averages. Notice that when a stock or index begins to rise, how the faster moving average is above the slower one. What this means is the more recent prices are getting stronger than prices in the past, it could mean an uptrend is beginning. The reverse of this, of course, is also true. When a faster moving average drops below a slower one, what that means is that more recent prices are getting weaker than prices in the past. It could mean that a downtrend is beginning. The MACD indicator is based on that behavior. It has two lines in its composition. The first we call the MACD line itself, and it is the red line in this indicator. It is simply the difference between those two moving averages on the chart. So when the faster moving average is below the slower one, you can see that MACD is negative. However, when the faster moving average is above the slower one, you can see that MACD is positive. The second line in the indicator is what we call the signal line. The signal line is simply a moving average of the MACD line, and it is the blue line in the indicator panel here. When the MACD goes above its average price, which is the signal line, it could mean that prices are getting stronger and you might be beginning an uptrend. Let's see how we can put the MACD to work. One way to generate trading signals is simply to monitor the MACD line itself. Notice when the MACD line goes from below zero to above zero, that can mean that the moving averages, the faster one is going above the slower one, an uptrend may be beginning. Many traders would use that as a buy signal and stay in that position until the MACD line goes from above zero to below zero, and then they might consider selling or even going short. Another way that traders use the MACD is to watch the MACD versus its signal line. When the MACD line crosses its signal line, many traders would use that as an early entry on a buy signal and then stay in that position until the MACD crosses back down below its signal line. Another way we can use the MACD is to try to pick tops and bottoms. Notice generally that when a stock is going higher, the MACD line tends to follow along with the stock. Sometimes though you can see that's not true. Between here and here, notice how the stock went up, but the MACD lines went the opposite way. We call that a negative divergence. What it means is the momentum on the last move higher was made with a little bit less oomph, so we could look for a potential pullback or a reversal. The opposite would be true if the stock continues to go down, but the MACD line doesn't. We would call that a positive divergence, and that could be a potential bottom. The MACD is one of the most popular and widely used indicators in technical analysis. But keep in mind, of course, that no indicator works all the time. You might want to confirm with other technical tools.
Introducing Schwab Stock Slices. For as little as $5, now anyone can own companies in the S&P 500, even if their shares cost more. At $5 a slice, you could own 10 companies for $50 instead of paying thousands. All commission-free online. Schwab Stock Slices, an easy way to start investing or to give the gift of stock ownership. Schwab, own your tomorrow.
Thanks. Bounced a trade idea off my firm. They don't get it.
Schwab shows you indicators, proprietary research, helps you see the full picture.
Speaking of...
Trade up to Schwab, the gut check you want, the intel you need.
Hello, and welcome to the Quick Start video for the options chain available on Schwab's StreetSmart Edge platform. Let's load the options chain. It can be found in the All-in-One Trade tool as well as Symbol Hub. For now, let's load the All-in-One Trade tool and click on Options Chain. In the main lower panel, the chain loads with basic information about each option in the chain, like call or put, the symbol, last trade, the change, bid-ask, the midpoint, volume, and open interest. You can add Greeks, probability, or other quote data in the Manage columns and Settings page. It can be accessed through the Actions dropdown or through right-clicking in the chain and selecting columns and settings. For simple calls and puts, click the arrow at the beginning of each row to display the available contracts for a particular expiration date. For more details about each option, click the arrow next to the contract to display the contract specifications along with other data. When you've selected a multi-leg strategy to trade, click the arrow at the beginning of each row to display the legs in each set. The Option Chain Filters row allows you to determine which contracts or pairings are available for you to view and choose from when setting up an options trade. The filters include Strategy Selector, Expiration Filters, Number of contracts or pairings to show, and when applicable, Width. These filters help to narrow down the chain to find the contract or pairing that meets your criteria. To remove adjusted options out of your option chain's display, you'll need to uncheck it in the option chain setting. You can filter weekly and quarterly options here as well. Trade directly from the option chains. Be sure you're in the Strategy Selector tab. Once there, all you have to do is click on your strategy of choice. The trade ticket updates to your strategy, and the contracts or eligible pairings will display in the option chains below. Click on the contract or pairing you want, and it is loaded in the trade ticket above. This sets up a limit order set to the midpoint price for that strategy. However, feel free to change that price to whatever you would like. In the Action field, choose whether to create a buy to open, buy to close, sell to open, or sell to close order. Max gain, break even, max loss, and estimated cost calculations will be displayed depending on your action. Lastly, we have the Views selector, which includes Theoretical, which is a view of calls and puts that allows you to select a Greek model and make changes to the different parameters that affect option pricing as calculated in that model in order to see how those changes would affect the prices and Greeks in that chain. And Covered Call, which shows calculations for covered call or covered put transactions. The covered call calculator gives traders an idea of how a buy right might work for or against them at expiration based on what they paid for it and where the stock price was at expiration. These are both estimates based on a mathematical model, but it can be used as a baseline for planning an options trade. This concludes the Quick Start guide for the options chain on Schwab's StreetSmart Edge. Please check out the Learning Center and the online help menu, both of which are located under the help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.
The price relative indicator is a way to judge how the stock, sector, or index you are following is performing relative to any other stock, sector, or index. While the word price is in the name, it is only important in relation to the price of the stock, sector, or index you are comparing it to. That's a key point, and one that can be confusing when traders are first using the price relative indicator. Let's look at some charts to see how this indicator works. Remember, this indicator gauges the relative performance, not the price. Here we are looking at two indices, the Dow Jones Healthcare Index, which is the green line, and the overall market as represented by the S&P 500, which is the orange line. Notice that from June till October, both indices were trending higher. We now look at the price relative line, which is the purple line in the lower pane, and we notice that it is sloped up. This means that healthcare is outperforming the overall market. If the symbol you are interested in is outperforming, you will always see that line sloped up. Now let's move over to December. As we see coming off the bottom in December, again, both indices were trending higher, but now we look at the price relative line and it is actually sloped down. This means that healthcare is now lagging the overall market. Remember, if the symbol you are interested in is underperforming the comparison stock, sector, or index, the price relative line will slope down. Let's move on to another example in the same time frame. Here we are comparing the semiconductors, the pink line, to the overall market, again, which is the orange line. Notice from November till the end of the year, while both indices were falling, we actually see with the price relative line that the semiconductors were outperforming. Then when the market turned around, the price relative line is telling us that the semiconductors were still outperforming and leading the overall market. You'll often see this when in a falling market, the stocks that do best when the market turns around are also the ones that can lead. There are numerous ways to use price relative to generate trading ideas. One way is to compare a sector to the overall market. If the price relative line starts to slope up, it means that money is beginning to rotate into that sector, potentially signaling the beginning of an uptrend. You might choose to buy a sector ETF to take advantage of this move. You could also compare a stock to its sector. This allows you to evaluate whether the stock you are considering is a leader or a laggard. It almost goes without saying that momentum traders prefer leaders. Another use is to compare one broad area of the market to another, such as comparing the price action of the small cap Russell 2000 to the large cap S&P 500. This approach provides all sorts of useful information. For example, if the small cap stocks, which tend to have more of their revenues based domestically, start to outperform the large cap stocks, it could be an indication that the market is worrying about international trade issues, which generally have an outsized effect on the large cap multinationals. Finally, you can combine all these techniques to drill down as much as possible. For example, by examining the various price relative studies, you might find that the large cap stocks are outperforming the small caps and that healthcare is also starting to outperform. You could then build a screen to find a large cap, healthcare stock that is outperforming the sector. To learn more about technical indicators and how to use them, check out all the other videos in this series and subscribe to our YouTube channel.
Stop and stop limit orders are both tools traders use to manage risk, but they're not the same. Let's look at how they work and explore why you would use each of them. A sell stop order is set at a specific price below the last trade price. If the stock falls to or below this price, it triggers a market sell order. Widely recognized as the quickest way to exit a trade, market orders are filled at the next available price. But stop orders will not protect you from a gap in prices during market hours or from one regular market session to the next. Now, a stop limit order is like a stop order, but with an extra layer, a limit price. Again, you set the stop price where you want the sell order triggered. But here's where they differ. You exercise a measure of control over the trade by also setting a limit price. Instead of the trade being executed at the next available price, you specify the lowest price you are willing to accept. Here's an example of what can happen if you set a stop order without a limit price. Let's say you hold shares of XYZ at $100. Your analysis suggests that if the price falls to 98, it could continue to move lower. With the intention of limiting your downside risk to $2 per share, you set your stop at 98. The stock closes at 100, but due to a disappointing aftermarket earnings announcement, the stock opens the next day at $90. Because the stock has traded below your stop price of 98, it triggered a market sell order. The good news is that your trade went through. The bad news is the price at which it executed was near 90, not near the 98 you anticipated. And if the price bounces back during the day to say $96, you might be sorry that trade went through. The stop limit order can help address this scenario. Let's use the same premise with you holding shares of XYZ at 100 and setting a stop order at 98. But this time, you're also going to place a limit at the minimum price you're willing to sell these shares. Let's say 95. In our first example, you were sold out at 90 because once the stop was triggered, it became a market order and executed at the next available price. Using the stop limit order, your order is still triggered, but doesn't execute unless the price rallies and hits your limit of $95. In this case, it works well. The price rebounded and the limit price protected you from taking a greater loss. You might think this is a better approach, but what if that price didn't rebound and instead continued to fall, hitting $85, $80, $75, or even lower? Now you're left holding those shares while their market value evaporates. So when does it make sense to use a stop versus a stop limit order? A stop order typically ensures that your trade is executed, but it does not guarantee the price. It can provide protection during regular market hours, but in a volatile market, you have no control over the price you'll get, and you may face a larger than anticipated loss. Use a stop order when you are more concerned